morning, everyone, and welcome to the European crossover webinar. And let's go on in. I have the first half of, I guess, us people refer to them as the Fangman stocks up here, but we'll go and take a look real quick to see where the euro is, which did go on and pair back yesterday, and take a look with the dollar X. We're kind of holding right here at these lows. You know, yesterday I had the low at let's go and pull this up and up here at 1752, but this 1732 was sitting there at the bottom, and that's where they went to. I mean, I thought that 1752 would kind of hold okay, but you know, that was a daily low. I didn't realize even until Asia when it hit. We'll take a look here at the dollar index. Just adding on a little bit. We did hang around this 93 and we kind of bounced off a little bit. I wouldn't bounce, but I mean, after sitting there for about 3 days. And we'll take a look at the Aussie. This one saw a little bit of a nice pullback, but we've come right into that support area and kind of holding there. Thought we might see a little bit for the follow through, but so far not. Let's go and take a look at what we have on the economic calendar. So we did have Spanish CPI an hour ago, which came in line at 0.2. HICP final came in line at 0.4. And we do have at the top of this next hour, we do have Eurozone industrial production. Then as we roll into the States, we do get PPI at 8:30 Eastern. And oh, Consumer Sentiment Index. That's not till 11 a.m. Eastern. That's, I guess, like a Reuters index. But it's a Reuters Ipsos Primary Consumer Index. Now, I know Ipsos also does political stuff, but that's odd. I've never seen that one before. So that's a Canadian Consumer Sentiment Index. Now, that's a new one. That'll be at noon Eastern. And we also have, at that same time, same thing, Consumer Sentiment Index. Now, that's a new one for the States also. Both at noon. That's a little bit of an odd one. Maybe something we'll keep an eye on. 8:30 Eastern, we do have, as I mentioned, PPI final demand. Let's take a look at where we stand here on the... You can see here we did pair back. We talked about this yesterday, if you remember. We're looking at Apple on a 30-minute. But we talked about how generally you'll see Apple going and fade into the day of the announcement, you know, the Apple event. Like it usually, during the event, it already starts fading. This started fading before the event even came on and started fading down. And we continued to fade, came a little bit off of those lows. You can see Microsoft held up well during the day. Amazon also paired back a bit. They almost came up to 3,500. There were some call options at 3,500. Looks like the high was 3,495. On the second, a little bit of a go round, a push there. And then we kind of faded. We can switch over to that screen. Oh, you can see here with Amazon. Same thing here in the 30-minute. Saw a nice little move back up at Tesla. And then Netflix, it just jumped out of nowhere. It was just like days going along okay, and then all of a sudden, kaboom, it just turns around and jumps $10 out of like nowhere, and actually went even beyond that a little bit. And Facebook was under pressure, and then it's finally kind of come up a little bit hard, but it was even under some pressure. And then things kind of turned around. It was kind of odd because it looked like we might run into a little bit of trouble. In these some of these key stocks, and the NQ would start to fade a bit, but they actually ended up going above that, and it was kind of a little bit different. Same thing with Apple too. I mean, they tested the 120 will go there. This kept me from shorting it. I almost shorted, added on. I had an okay day yesterday. I should have been a little bit more aggressive, but I saw here and I said, you know what? I think they're just going to go below this 120 because it looked like it's going to try and maybe push a little bit lower. I thought, you know, I think they're just going to just stab below 120 and jump back up. And you can see that's exactly what they did. And then they started moving higher. And we saw the NQ kind of come off of those lows a little bit after testing 2-day VWAP and holding that. Irina says good morning, and she says your view on S&P and Nasdaq would be appreciated. Yeah, we'll get to that. So let's go and move there. So as you've noticed here on the show, we'll not only cover FX, but we will take a look at the indices. You do see us kind of touch into the Nasdaq, but same thing with the NQ. I mean, with the S&Ps, we'll kind of take a poke on that. One of the things that we talked about that last week. Let me go back here. Bear with me. So as you can see here, we added the euro pound this week. Ended up getting rid of the euro yen. And I have thought, and I mentioned that too, this was at the end of last week, I've thought about adding NQ and S&P, but the thing is, the movements are so big overall, you can't. Let's take a look at Nasdaq, and it wasn't like it swung wildly like the other day. But can you imagine if I said, "Well, this is a good place to buy because we were much higher here at 12,100, and then we drop all the way down to 60 handles lower." You see what I'm saying? Or the same thing is, this is a good area to go in and fade here, right there at 12,150, and then look, we rally all the way up to 12,260. I mean, the moves are too big to go on and come up with that. And I mean, it's fine if you were trading, like I said, we had one trade for the day. If you can get short at 12,200, that's a good area, whatever. Even there at 12,220, I'm just saying, is you still would have been under some pressure, not a whole lot, but it's just the indices move too much to have it set up the way we do with FX. So I just wanted to go on and touch on that. But let's go and take a look at the Nasdaq. Let's take a look here on the 2-hour chart. That gives us a little bit better perspective. So let's pull this back. So we've already had a pretty good run here. And we talked about that yesterday. Hey, you got to respect the technicals. And obviously we hear that. But I'm saying is we talked about having yesterday, you have to have a couple of scenarios to kind of keep ourselves in check. Like I said, we saw this big run-in on Monday. I'm like, oh, we've already rallied 700 handles. And we did come into some good resistance here at 927. And I'm thinking, well, that's a pretty good run here. Look at that. We ought to see a pretty good reaction. And we did. And I mean, initially. And then I went to the well again, and all of a sudden we should start moving higher. I'm like, oh, well, I'm sure we're just got a little bit overboard. We're going to come back. And then, like I said, we did. And the thing is, well, as I mentioned, is one of the reasons that they had rallied, not only with the stimulus talks, but there was kind of a twofold thing, because the idea is now that also, if you're to believe the polls, Biden's widening, so you lessen that concern about the contested election where it has real viability. So it was kind of like a twofold thing, because if you think about it, the stimulus, it's not happening right yet. I mean, Pelosi's like, no, we want more. And so you'd think, oh, God, and we're having some people in a lot of trouble, and they would dip back. And no, they're thinking, okay, if Biden's going to win, hey, you know what? That opens the door for more stimulus, and it's just sticking with that notion. And then, of course, like I said, we already talked about that. Now, like I said, I understand, hey, give a perspective. I'm just kind of touching back on what our theme was, and basically reinforcing what we were talking about. And bear with me one moment. Which was what we see quite often with indices is that and especially with Nasdaq, and we mentioned and touched on this, I think, yesterday, and to a certain extent may have been on Friday. Once they get a notion, it's like a dog with a bone. It's not going to let go of it, and they just won't let go of it. And so you're thinking, as I told you, came into, over the weekend, if it came into here and saying like, oh, well, they didn't get it. They've got a dip. And we just kept going higher. And then it's almost like they find the glass being half full. Even if someone drinks the glass more water out of the glass, it's still half full. I'm just saying is that once it sinks its teeth in something, it's pretty hard to shake it. So one of the things that we talked about was when we rallied, we were talking about that yesterday. I said, hey, look, you still got to respect it, because this isn't a correction. We were talking about at this point yesterday, right in here. Kind of like I said, I'll do kind of what Blake used to do. Let's see him. He kind of backs it up like that. And he goes, so at this point, we came here, and I'm like, right there. And I'm like, this isn't really a correction. I go, at least if we would have dipped down to 927, I'd say, well, that's a little bit of a correction. I mean, all we did basically was just consolidate, and then here we were. We ripped going in the morning, and then finally we did run out of gas at 12,237, and that's good to have levels. I mean, this was a pretty good level right here. You can see here, and we dipped to there, and once we break it, it really offsets. So I didn't take it on at that point. I was kind of like, you know what, I'm not going to be trying to step in front of something. But that was a good level because, like I said, you can see the market takes a pause here. We did back, not a whole lot, but we did back here. Once we get past it, it really opens the door for a bigger move here. And when we come back, we hold initially, if you look on here, maybe hard to see. You see how they hold on this 2-hour close? Then we go below it, but we close right at that same support. We bounce off of it, and then we come through it. And once we get through it, it's, all heck breaks loose. You see what I'm saying? So that was a key number there to really look at, because that was a good, significant, you want to look at an area where it's respected by the bulls and the bears. So it was respected initially by the bulls, not a whole lot. I mean, I'm saying is it wasn't like a huge pause, but it was respected because we kind of paused there. Then we did back. Then once we got through it, we took off. Then we come back. How does it act on the rebound? I mean, on the pullback. Okay, it holds there. It's hard to see. We hold. Then we open and we go lower, but we close right at it. So they've respected it, and we bounced off of it. So this is a good solid bar. And then once we break this time, then we really take off. So that was really a good level. If you think of it, that's a good way to choose a level. There's different levels, like you can say here, but did we we paused, but once we got above it, did we take off? Not really. We dipped back here. Now we held it, but we took off. So it's a level, but one that's truly respected was this 12,237. And I, once again, like I said, I was like, no, I'm going to let the cash market open and they'll see what happens. But that was a pretty good dip back level here. But getting back to Irina saying, hey, let's take a look on it. You can see we pull back, but that's not a correction. Once again, this is just a consolidation because once again, from this area, a pullback would be to 11,927, which would be to break this area. Let's go in here. We break this area, and it's still not a huge correction, but we break this area and come down to here. Then we can say there was at least a little bit of a correction, a little bit. We're not even getting that, and we do have this trend line over here. Let me pull this out a little bit. We'll keep it on it. And that's not a real good solid trend line in the sense that this isn't, you like to have this, I'll give you an example. Like, okay, from here to here, you see how we got up here to 605 and we dipped all the way back down? Now that's connecting, you know, the low from here and the low from here. This one, that's not really a low here. But for right now, let me go over here. That's as good as it gets. I'm just saying is we're trying to find something at, you know, when I put these up here, you're just trying to see if you can find an area, like when the market comes back, is it respecting that area? You know what I mean? On the you see this thing doesn't want to, you know, let's just go on in with this and make it easier. Right there. There. And you just want to see, that's not really a dip, but it comes back. It's the closest thing that we have right now for a trend line. So if we were to come back, we'd say, how does it react to it? It's not the same significance as one that there's a significant low and a significant pullback. You see, that's a real pullback from 605 all the way down here to just actually a little bit under 11,200. This isn't. This is just like a pause. But once again, it's the closest thing we have. We have to say, well, let's see if we can draw something that it'll react to. But once again, like I said, this is just consolidation here. This isn't what you would call a pullback. Now, if you look on a 5-minute chart, maybe even a little bit on a 30-minute, you say, well, there's a pullback, but is it really a pullback? I mean, of this move, when you look at it, and like I said, you put it to the eye test, is that really a pullback? You have to say, well, not really. I mean, well, it kind of pulled back a little bit, but was that a little bit of a dip of a correction? Well, no, I guess not. I mean, if you look at the overall move, you know what I mean? You see from where it started and how it's gone. No, it's just a gentle pareback. So the door's still open. But I will say this, is that I think we did go through a couple of key events, and we talked about that yesterday, which kind of made me mad about to myself on Monday, because I knew the Apple event was coming on Tuesday. I'm like, okay, well, maybe they'll take a pause because we already had a pretty good run. But we already talked about it. Once these equities get on the run, whether it's to the upside or to the downside, it's pretty hard to shake it. You see what I'm saying? So I probably should have waited. You know what I mean? I said at least wait till Tuesday to come in. So this is where I had made some gains on. I talked about that in European trading on Monday. It ended up giving them back and having to try and scalp around, and still ended up down for the day. I'm talking about Monday. So the thing is, we have reached a couple of key events. Apple event, it's already over. And also, not to go and dip into the minutia, but there was a thing that they were looking about called Apple AirTags, and they didn't have that. And it's basically a little tag that you can put on your iPhone or other things, and it can locate your phone. All of us misplace our phone at times, and you can put it on different. They even had one where I saw an advertisement where, you know, you could have put it on your laptop, and your iPhone will actually locate it. If you go to, I think one example was like you went to like a little restaurant, an outdoor restaurant, and there's advertisement where the girl doesn't even know where she left her laptop or forgot about it, and sure enough, she sees it and she picks it up and blah, blah, blah. Those would have been a hot seller for Christmas, and a lot of people were disappointed. My point was being, I said not to get into the minutia, but I think that could have been a driver where we could see Apple continue much further. We just saw it right now. It's off those highs. Once again, Amazon, it's still up in the air. I mean, up in the air as far as it's still up in the clouds. But once Prime Day gets by, boom, you know what I mean, it's going to be over. My point is I think we did see some good selling yesterday. So it'll be interesting to see what this does today, because ultimately what we may going to do is You know, we saw the big run here, and then Tuesday we had another run, came up here again and then now, what else is there going to be left? So we could end up doing something like this, kind of like here, here, and then here. Doggone it. Like that, down to here. I didn't restart my computer, and so it might be acting up a little bit here. But anyway, it could be like that, or I don't, if we do get a move, and once again, that's what I'm saying about scenarios. If we get another move up here, I don't think it doesn't have enough juice, because I think those probably, don't forget Apple's the #1 stock. So if Apple were to, I don't think Apple will get back to its highs that we just had, but let's say, and Amazon's already pretty high. That's what I'm thinking. If it could be something like that, we just barely take out the high and then we come back to correct. And once again, I'm not expecting some big correction or anything like that, but I think we're going to be stymied. And once again, you got to respect the technicals. Have they corrected? No. All they've done, you have to consider, this is just, all we've done is consolidated. So it'd be interesting, you know, I just don't see if there's enough juice, because Apple event is already over. That's the top stock, the top driver. Now, Microsoft is doing really well, and it's close to its highs. But once again, like I said, Amazon, they had those $3,500 calls. We were up at $34.95. We made that run up there. I think it was $34.92. We ran out of gas. We made another run back up, and it looks like we made it up to $34.95. And then we quickly ran out of gas, and we're just kind of hanging around right now at $34.50. So that's what I'm saying. We may consolidate, and then maybe we end up sliding back. Not sliding back like a hard correction, but maybe sliding back a little more, so eventually we come down in this area here. Then the market tries to figure out what it does. Like, once again, we've had a pretty phenomenal run. And once again, you have to be careful, like I said, which I did, stepping in and selling it. Let the market dictate, and let the market say, wow, it's kind of run out of gas. And you say, well, yeah, you know what? There was good heavy selling. There's some decent selling in Apple yesterday. We've already got past the event. We're already here for Prime Day. That could have significant push for later, but maybe we'll have to get that pause. So maybe we look here and see how, up in here, how the market reacts when cash equities are open after an hour and a half, and we see if it can't really sustain it, then maybe we open the door for us to move lower. Don't forget, yesterday we held the 2-day VWAP very well. This is the VWAP from the I have anchored VWAP from when there's not going to be no stimulus. So this is for a much lower move. Anyway, we need to get moving along. Take a look at the S&Ps. I think the same thing with the S&Ps is the same thing. Even the S&Ps look like a little bit weaker than the Nasdaq. See how the Nasdaq's holding up better? You see that? And then here's the S&Ps. But I think it's the same thing on both of them. The S&Ps look a little bit more open to pull them back. We'll have to see what happens at that point. But that's the take on those. We'll just do a quick look-see at gold. Gold's not really doing anything, I don't see. They're just kind of hanging around here. And crude oil, I still have a certain fondness. I really don't want to touch it, but we do get some decent moves. But you see what I'm saying? Is like, you come up here, you dip, you run up here, you have a shooting star right here. That would be considered. I mean, but it wouldn't be a shooting star. It's like a gravestone doji. It's just the wick's a little bit high. But you can see we saw a pair back. But you can see it drips, and then it can just rip you. You see what I'm saying? So that's the one thing I just don't like about it. I mean, it's just like rip. Okay, then we kind of dip back. Oh, wow, look how they held that. We're open to really taking off. If you look at it, look, we came up here, we test the lows, we come back. It's really held. We're ready to take off to the races. And we come up here, then it's like the Charlie Brown thing. Wah, wah. We just kind of dip back here, and then we little by little we dip. You know what I'm saying? That I just don't like the way this thing trades. I think, to me, the few times in the past when a few years ago, I look at it, you really have to look at everything. And to me, this is the only market you can be trading with. You keep an eye on the dollar and an eye on the S&Ps. But to me, you have to be, at least for me, I had to be looking at this and unleaded gas and Brent at the same time. And it's just, I'll pass. So anyway, that's where we are. Let's go back in here to Nasdaq. So that's the take on that. Let's come over here. Irina says, yes, I'm still long Amazon, Nvidia, and PayPal, but I sold Apple because the market did not appreciate the new product presentation. Yeah, Irina, I said that in the chat. So Irina, I hope you saw those notes on there. Because one of the things they were looking at, and that's what was my concern, was there was two things: the 120 hertz screen, which it wasn't 120 hertz, but the key thing was they were really looking for those Apple tags to come out, and that would have been a revenue driver, and they didn't. I said, and really I was like, I'd like to sell this, but I'm afraid they're going to announce the tags, because if they do, that would be a good revenue driver for Christmas and for the fourth quarter, and they didn't announce it. So I'm surprised it's actually holding up. I think it's susceptible. Amazon, well, we've made that run for 3,500. I don't think we're going to, I mean, I'm not one for options, so probably you know better than me. Maybe those 3,500 options are still going to be here towards Friday or whatever. I'm not an options player. I don't know all the intricacies, but and I don't follow PayPal. Anyway, let's go and move on to FX. I did spend a lot more time than I usually do, but I thought I wanted to touch base to not only, as Irina was saying, to kind of look at the overview, but to understand, not that I'm all great, but like I told you, what I try and do is I try and share from my own experiences when I take a loss. And that was my point here, was like, if you step in too quickly, one thing about equities, once they get going, they really like to get going, and they don't let off they're just like a dog with a bone, and they just won't let go of it. So you have to really, one thing one thing that did help me yesterday was to realize that, and then just say, okay, look, I'll play it, but I need to respect this until it tells me. It'll turn, and I don't even say turn like it goes all the way back down, but turn for a correction like it's kind of run out of gas. But don't forget, the election is coming up, and everything points towards a pretty big win for Biden. We'll see whether it happens or not. But that's what the market's believing. So once again, it's not a matter of politics, whoever your candidate is. I'm just saying that's what the market's looking at. And from the way the market looks at it, it says that this is a positive story outlook for those two reasons. One is, at this point, secondary, which is, wow, if he gets a big enough lead, then there's not a viable contested election. I mean, I don't think Trump's going to concede, but immediately. But I'm just saying, if this plays out, you have to look at those scenarios. But depending on how big the lead is and how many states, it's going to be hard the market's just not going to believe it or think, give it any credence. And then also is that if Biden's going to win, and look how Pelosi's fighting, it just bodes for a bigger stimulus, woohoo, as far as the market's looking at, woohoo, and that's why it's still hanging around up here at these levels. So anyway, let's go and jump into FX. Yeah, you're welcome, Irina. Happy to share that. Once again, I went in a lot longer than I wanted to share, but I thought it was important to say, yeah, you know what, that is right. It is just consolidating, and why we have to respect. Because like I said, I used to be the kind I'd hurry up and jump in. Obviously, I did the same thing on Monday. But I'm saying with stocks, you have to give a little bit more room for it to play itself out. And even though Amazon or Apple event is over, and Amazon, we're having it in the middle of the Prime Day, is that still the market's not willing to give that up yet. So let's go and move into the FX. Bear with me. So the Australian dollar near 1 week lows and New Zealand dollar ticks up. The Australian dollar hobbled near 1 week lows on Wednesday on worries top trading partner China was imposing new restrictions on coal imports, while the New Zealand dollar was a shade higher. The Aussie was last at 71.62 after 2 days of losses. It took it as low as 71.51, a level not seen since early October. The losses accelerated on news reported on Tuesday that state-owned utilities and steel mills in China has received verbal notice from customs to stop importing Australian thermal and cooking coal. Coal is Australia's #2 export after iron ore. ANZ analysts estimate 36% of Australians' coking coal exports have ended up in China so far in 2020, up from 28% in 2019. Let's see. This all seems to suggest another concerted effort by authorities to support the domestic market. Cargoes were taking a long time to be sold amid the confusion, with buyers treading carefully. Any distressed cargoes of coking coal will also struggle to find a home quickly outside China, with the steel market extremely weak. Earlier, a survey of Australian consumer sentiment for October showed the index climbed to the highest since July of 2018 in a sign of confidence. Let's see how we're pretty quiet right now. On Wednesday, the RBNZ Assistant Governor Chris Hawkesby cemented views regarding negative rates were being actively considered. He said the economy was expected to require policy support over time, and talking about negative rates was not a game or bluff. And let's close in with the dollar. Dollar gains on hold as risk speculators at bay. U.S. dollar held on to gains against most currencies on Wednesday as renewed questions about the coronavirus vaccine and a lack of an agreement on additional U.S. fiscal stimulus prompted a shift to safer assets. The euro and British pound are likely to extend declines, analysts said, in a return of restrictions on economic activity in Europe and Britain to battle a second wave of coronavirus infections unnerves investors. Currency moves, however, are likely to be subdued as the U.S. presidential election looms on November the 3rd. But analysts said sentiment is leaning against riskier bets, which should support the dollar in the coming days. Many factors are pointing to more upside for the dollar, said Masafumi Yamamoto. U.S. stimulus may not come until after the election. We just hit on that. People's Bank of China is halting the yuan rise. Pound trade at 29.26. Sterling also took a hit due to worries about little progress between Britain and the European Union and the chance that Bank of England will adopt negative rates. Risk appetites have weakened after Johnson & Johnson said on Tuesday its positive clinical trial. Hopes are fading that U.S. Republicans and Democrats will reach a compromise on a new round of fiscal stimulus, which would deal a blow to the economic outlook. Both developments are supporting the dollar, traders said. Yeah, because the Republicans, Senate is supposed to vote, but that's on a $500 billion package. And what Pelosi wants is $2.2 trillion. So it's just like, what sense does it make? And then there's a little bit of, Trump tweeted, go big or go home. But that's a little tip of the hat for those who are thinking that, that Trump is going to lose and probably lose pretty heavily, is that the Republican Senate is like, okay, we'll vote for $500 billion. It's like, but wait a minute, Trump just said, go big or go home. It's like, we don't care. We're taking care of ourselves. So that's kind of a tip of the hat for that. Once again, like towards what's going on with the polls we talked about, is that potentially we're seeing a big win, which should kind of negate that scenario of a contested election. So, but anyway, so with that, let's go move on to the analysis. And you can see here, we're just trading very quiet here. You see how we're not really even moving? That kind of tells me, like I said, if we could have reacted higher, we could have gone higher on a rebound or moved lower. And I think the market's just like kind of like stagnant. I don't see we'll see any real reaction to it getting to the cash equity open. I believe we shall see. Let's go back into the FX. So let's move into the euro. So the euro pared back beyond the bias chart support, which at the time number 1752. Right to the daily level, we talked about that, 1732. Support on Wednesday will be 1692, which I was trying to give it a little bit of, in case you want to see some follow through, with resistance at 1787. So still bullish overall. We're going to have to get a close below this before we can switch it. Let's go to the cable. The cable paired back on Tuesday with a break below 130. Support on Wednesday will be 28.78. Looks like we just hit that with resistance at 29.89. So the Aussie extended its pair back on Tuesday, closing at 71.59. You can see that. Wednesday, support on Wednesday will be 71.27 with resistance at 71.91. Onto the Kiwi.
PBOC official overall liquidity is reasonable and ample. The official saying overall liquidity is reasonable and ample.
Kiwi closed Tuesday with a doji. You can see that here. Support on Wednesday will be 66.12 with resistance at 66.83. Well, we're trading in a relatively tight range overall today, across the board, at least so far.
So the comments from Russian Foreign Minister Lavrov, ties with Russia do not look very optimistic, but economic interest must.
Onto the dollar can. Just not seeing much movement. Dollar can continued to defend 31 even. Support remains 30.71 with the resistance at 31.89. 31.89. Oh, so no changes. Let's go to the peso. Dollar peso defended the 21 area. The pair got as high as 21.47. Resistance on Wednesday will be 21.52 with support at 21.19.
Further from the PBOC official that credit and social financing registered reasonable growth.
Dollar yen moved off of the 520s to 560. Resistance on Wednesday will be 573 with support at 516. Man, these markets are dead. Holy smokes. Cash dollar index. Dollar index picked itself off of the 93 even lows of the past 3 days and moved higher about 50 ticks on Tuesday. Resistance on Wednesday will be 93.87 with support at 93.21. And on to the cross rates. Okay, you saw a nice move here, and right now, we're just kind of dead in the water. You know, hard to say on this. This thing isn't really moving that much. I mean, we saw a little bit of bounce here, but there's a lot of volume in here. We'll go with this high. I just don't even know if they'd even make it up to 87 here, but that would be that. I mean, that would be the flip here. Well, I guess we got to go with it just in case. That will be your risk level, 93.87 on the upside. I ended up flipping to the. What was I thinking? Here we go. You can see here, kind of finishing a doji. The risk level is going to be right there, the closing high there, which is 70.43, which we had 41. And on the downside, this high right there, which is 69.90. Let's go to the euro pound. Nice bounce off of this area. Risk level, you can see just going to the levels is going to be 91.32. It's already had a pretty good little run here. That is a risk, so we'll go with that. And support right there, which is 90.55. Going into the euro odd. You can see here where they ran up in here, and now they've just gone dead. I mean, this is just nuts. But the risk, you see the high from here and the low here will give it a little bit more room, which is going to be 64.23 on the upside. On the downside, if we do test, I don't think we'll make it all the way down there, but that would be it right here at this open, which is 63.38. Moving into the Euro Kiwi. Wow, we continue to slide here. Support's going to be these. You see these two bars right there? Right there. 75.82. Upside that low bar, 76.95. And the way this is traded, you have to go with the bearish. Let's hurry up, move into the Aussie yen. After 2 straight down days, they're trying to make a little bit of a stand here. I don't see anything here. I don't know that we can make it all the way back down here to 75.23. We're going to go right there with that, 75.27. Upside, this high mark right there, and that coincides with this low bar there. So 75.90. Onto the guppy. Oh, we did go and take the lows out here at this 35.89, and you see this cluster right here of lows right there. So 35.54. And on this move back, you see this low here, right there, and that coincides with this high there. Just about 36.61 on the upside. This one, it was starting to get bullish. We'll keep it, as long as it holds above here, it's still bullish. And lastly, let's finish up with the odd. Dip, you can see where it potentially go to, which is 79.50. And the upside, that high bar right there, which is going to be 80.51. And that does it here for FX. We'll get that posted in the chat room. And thanks for joining us here on the European Crossover webinar.